Hi guys. Today we will analyze Amazon stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Amazon's overall performance in the market is below average. Also, recent evolutions are not positive. The short-term trend is neutral, the long-term trend is still positive, but a reversal can happen at any time. Support level is around $2,777. The next support levels are around $2,450 and $2,000. Resistance level is around $3,075. The next resistance levels are around $3,228 and $3,500. In the last month the stock has been trading between $2,790 and $3,276 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 3.7 million. This is a good sign, as it is always nice to have a liquid stock. The stock is currently trading in the lower part of its 52-week range, which is not a good signal. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 28% per year, for last 5 years. We see that the average profit margin of the stock has been around 5% per year, for last 5 years. Also, we see that the average free cash flow to net income rate of the stock has been around 129% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Amazon company: bad, average, and good. First scenario. Amazon will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 14%. Future profit margin would be low, 5%. Future free cash flow to net income rate would be low, 80%. In this case, the fair value of the stock today would be $1,046. Second scenario. Amazon will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 17%. Future profit margin would be average, 6%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $1,540. Third scenario. Amazon will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 20%. Future profit margin would be high, 7%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $2,198. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 64.71. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Amazon, analysts forecast growth rate around 16% per year in next 5 years, and future P/E around 50. Again, I will use 3 different scenarios for Amazon company: bad, average, and good. First scenario. Amazon will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 14%. Future P/E would be low, 14. In this case, The fair value of the stock today would be $1,062. Second scenario. Amazon will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 17%. Future PE would be average, 16. In this case, the fair value of the stock today would be $1,534. Third scenario. Amazon will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 20%. Future PE would be high, 18. In this case, the fair value of the stock today would be $2,167. As you can see, today the stock is overvalued, $2,912, even if we expect the company's high performance in future. The fundamentals are good. Amazon shows good growth, but the stock is currently too expensive. I may consider buying the stock when the stock drops below $2,200. Company's strengths. Amazon is the leading U.S. e-commerce retailer and among the top e-commerce sites globally. Amazon also provides Amazon Web Services, AWS, which is the global leader in cloud-based platforms. The company's Prime membership platform is a key online retail differentiator, providing customers with free shipping along with exclusive media content. The company's Kindle Reader and Alexa-based Echo and Digital voice assistants are category leaders. Amazon also acquired Whole Foods Market in 2017. Amazon has grown to be one of the most successful companies in the world, grabbing market share not only in retail but cloud computing, media, and entertainment. The strong momentum that Amazon built during the pandemic period, at Prime, at AWS, and elsewhere, appears to be persisting as an ongoing sales and margin driver going forward. Amazon has the strength to sustain growth during this difficult time, and its plans to add employees signal management's confidence in its long-term operating model and strategy. Amazon has a return on assets of 8% and return on equity of 24%. This is amongst the best returns in the industry. Amazon has a profit margin of 7%. This is amongst the best returns in the industry. In the coming 5 years, the revenue will grow by 16% yearly. Based on estimates for the next 5 years, Amazon will show a very strong growth in earnings per share. The EPS will grow by 40% on average per year. Risks. Amazon is dealing with the same goods, logistics, and labor cost challenges as everyone else amid the global supply chain crisis, only on an unimaginably larger scale. The company is likely to face fierce competition over the next several years as more companies expand online sales and match Amazon's prices offline. Amazon could be hurt in the event of a significant security breach, theft of client information, or outages at its Amazon Web Services unit. This is a risk for all e-commerce businesses, but may be heightened in the case of a well-known consumer company like Amazon. The valuation of Amazon shares poses investment risk. At nearly $3,000 a share, Amazon is a highly speculative investment. High share price volatility is a consequence of this speculation. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.